Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Tuesday, June 3rd. Going to be going over the usual tickers, but then I do also have on the list GameStop because there was some very interesting options activity I wanted to go over. Then also did get an alert on Indie Semiconductor, ticker symbol INDI. So wanted to follow up on that chart. Wanted to talk about the importance of taking profits, looking over at INM, which is InMed Pharmaceuticals. Went on a rampage yesterday, but has pulled back quite a bit from the highs. And then NEO has reported, I believe has already reported earnings, and their stock is, going up and down a little bit around that. So I wanted to talk about that. But first, let's get into the UVIX. This is, of course, the 2x long VIX Futures ETF, which closed yesterday on Monday, June 2nd, at a price of $28.52, being down about 2.6% on the day, and then continuing down about 5 cents or 0.18% in the pre-market. And so it does seem like it has been having a tough time breaking above this green $30 level that I have marked there. Was some resistance over here, consolidating below it. And now we are consolidating below it again. Over here, we did get a breakout to the upside, hitting a high during market hours of 35.96, just below this downtrend. But I believe in the pre-market on that day, we were above $36, which is a price that I had talked about. Now, pulling back, consolidating here, it's quite possible we're forming a bear flag and going to be heading lower. I do have an alert here at $27. That, for me, is not a buy level. I am looking to add at 25 at this purple line here. If it does come lower, but maybe it doesn't, and if it doesn't, that means it's going up, and I am happy about that. And for me personally, I don't have a huge position in UVIX, but I do think it is a nice stock to hold, a nice ETF to hold for if in case there is some volatility in the markets and stocks come down. We can see nice short-term rips in the UVIX, take some profits up here when everything else is down, so that you got some cash on the side to roll into other positions. So that's kind of my thesis with the UVIX. And as you can see, these two pretty massive spikes that we've seen. This one corresponded with August 5th, and this one corresponded with the high that was hit on April 8th, and that was right around the Liberation Day tariffs and stuff like that. But we can see between these two spikes that price did consolidate in this range, in this parallel channel. And then I do have some of these levels, like 25 in purple here. We haven't yet hit that level, hit a low of 25.85 on February 20th. So yeah, I mean, maybe we do hit 25, as that is a downtrending channel, a downtrending parallel channel, and we have not yet, been testing the bottom of it. So maybe we do break down. So do be cautious of that. But before I flip over to the VIX, I should check out the 10-minute time frame so we can see what happened yesterday. I was talking about this during the pre-market when it was right around 30, but then we did see it pull back into open, bounce a little bit, but then fade into closing, like I said, down at 2.6%, hitting a low during the after hours yesterday of $28.33 before floating up into the overnight, continuing to float into throughout the overnight before hitting a top, let's see, at $29.30 during the pre-market, and then pulling down pretty dramatically to the current price, or current low of $28.38, but it looks like it's just about 1 cent above that during the pre-market trading. So we'll have to see where that opens up at. I'm wondering if it is going to be heading down to 25. I suspect it will be, but it might take some time getting there. And, I'll probably just be holding all throughout that. We do have this gap up here, I should note, at 38.12, and that was the closing price on May 9th. So maybe we do break above 36, get to 38, but maybe that acts as some resistance, as anybody buying up here may want a breath of fresh air if price does get back to 38. But maybe we break past it and head up to 44.42, which was the low on April 9th, as you can see here, that yellow line, and then we did consolidate below that level, so I think that it could be acting as some notable resistance. But then flipping over to the VIX, which is the market volatility index, closed yesterday at a price of $18.36, being down 1.13%, whereas the UVIX was down 2.6%, so this is 2x leveraged, so not really too surprising to see it down more than the VIX. But what we can see over here is basically the same pattern that consolidating around this level, approximately $18, hit a low on May 16th of 17.15, then bouncing, actually filling that gap and getting up to that orange line at 23.76, which let's see, that one actually has some more history. That corresponds with the high that was made after the rip up to on August 5th. Then we pulled back, and then the next high, which was hit on September 6th, was at 23.76. So we did get above that level, and the low corresponding with May 2nd, which I believe is actually, no, it goes back further. The low from April 9th for the UVIX, let's just compare that with the VIX. That was actually up at around $32. Looks like let's see, the low was $31.90. So the VIX does have some more room to run to get back up to that level corresponding with the yellow line here. But the gap in the UVIX has not yet been filled at 38.12, whereas with the VIX, that gap has been filled. So maybe there's less, incentive for this to go up, and then it starts to come down more. But it all depends on what happens in the broader markets, in the economy, with tariffs, with trade, and lots of stuff can send this higher. So I think that VIX, this is based on options as far as I understand. A little bit risky to hold those because it's all about timing it, whereas the UVIX, you don't have to do that. So for me personally, I just like to build up a small position as this does go lower, because if you do look at this historically, you can see that following this pullback, accumulating the UVIX in this parallel channel would have led to, let's see, even going from the highest point here, so that high that was hit on September 6th, even if, your average was at that, the range here was over 50% to the upside, hitting that high on April 8th. So I think that this is just a really nice way to hedge, whether it's over the long term. This is about, let's see, I should have noted how many days that was, but it's about 200 days, 214 days, so more than half a year. But like I said, it's just a nice way to hedge. So good to keep that in mind. But then let's flip over to the SPY. This is the S&P 500 tracking ETF, which closed on Monday at a price of $592.71, being up a little over 0.5%, 0.56%, but pulling back 0.07% in the pre-market, down about 35 cents to around $592.36. And what, I would not be surprised at all by if we do see the SPY head up towards $600 and then close the week above $600, just because I feel like so many people are so bearish. And I really see this from Tom Lee of Fundstrat's posts on X. A lot of people being super bearish, saying that he's an idiot, all this stuff. He's a really smart guy, really understands the market well. And, he's just been talking about how all of those bears are really indicators that the top is not in yet, that, this is going to be heading back above 600, back to these all-time highs around 611.39. I think we could be heading to like 615, 620, maybe even higher. But maybe we do see a pullback, maybe a retest of around 570 before then. However, I've kind of suggested that with this doodle that suggests, putting in higher lows as we consolidate here, putting in what would be an ascending triangle or a bull flag, and then break to the upside. But with that, it's just going to be time consolidating here, getting bears to really build up their thesis that, hey, the top is in, and then their faces get ripped off. So, I suspect that the highs are not in for the SPY for the year, and I think this is going to be going higher. But, it might take some time. Maybe we pull back to 570, and there are some gaps to the downside around 565, 555. So do keep that in mind. Looking over at the 10-minute time frame, we can see that from yesterday, following the pre-market, we did float up with a little bit of volatility, hitting a high. It looks like just as the after hours started at $593.47. And then we just kind of faded down through the after hours, through the overnight, coming back actually to that yellow line right around 589. We actually hit a low of 589.01, and that was in the pre-market trading, and we have since bounced from there. But so far, we have put in a lower high. We'll have to see if we take out that high of 593.47, and that would correspond with, higher lows that we have seen. If we put in a higher highs, we're just in an uptrend, not looking so bad. I think that it's going to be above 600 by the end of the week, but we'll have to see. We'll find out. And then now looking over at the SPX, which is the S&P 500 index, closed yesterday at a price of $5,935.94, being up 0.41% on the day. And it's just kind of consolidating around this red line here at $5,864.89, which was like the consolidation lows over here. No, that was a good dip buying level that was tested multiple times to be getting, about 3 to 4% rallies on those dips. So just rinse and repeat, very nice, before breaking lower. And then when we bounced, we retested actually this purple line corresponding with Head and Shoulders neckline there. We did break, get a measured move to the downside, rejecting from that level. Maybe we pull back to it. That will be around $5,700, corresponding with this 236 Fibonacci retracement. We also do have some gaps to the downside. So I think that 5,700 could be some very notable support. But just like with the SPY, just add a zero to it. I think that the SPX could be trading above $6,000 by the end of the week, potentially closing the week above 6,000. I don't think, though, that this week we will be getting back to the all-time highs around $6,147.43, which was hit on February 19th. I think we break 6,000 this week, and then maybe next week we can get back to putting new all-time highs on the chart. So good to be keeping that in mind. But yeah, so far, we did pull back here, got a nice bounce, consolidation. And actually, I just want to look over at the volume on the SPY following this pullback and consolidation. Volume hasn't really been too impressive. Not super high volume or anything like that. Nothing really stands out, although we did get some divergence here with larger volume on the 30th and not a big spread in that candle for that day. So that divergence suggests that there's a good amount of effort being put into holding the ETF up. And then we see, pullback in volume and a wider spread candle. So that could be suggesting we do see a pullback to around 570 on the SPY, the SPX maybe 5,700. But I think that would be probably a dip buying opportunity. But anyways, now I'm going to flip over to crypto, just talking about Bitcoin and then Ethereum. Bitcoin currently trading around 105,000. Did get a nice little bounce yesterday. But what I am going to do is actually look at this over here on TradingView. I just think the data is a little bit better, and I do go over this every Saturday for Crypto Corner Stat Stacker, so thought I'd follow up on it. And based on this doodle, I think that we could be heading down to possibly sub $100,000, right around where the cursor is. This doodle suggests a retracement to around 98,000, maybe 99,000. And that corresponds with this the 382 just below $98,000, also corresponding with the high that we hit on May 2nd. So, if this does start to break lower, which I think it will, I think people will start to eye the prior highs here. And also this 382, they line up very nicely. So people will be targeting 98,000. But, we don't always pull back to those prior levels. And anybody being stubborn, waiting for those levels, being greedy to the downside, they get left behind. And so I could see this heading back to sub 100,000. But, again, 100,000 being a psychological level, a lot of people eyeing it, wanting to buy back below 100,000. Maybe we don't get that opportunity again. And so maybe we just pull back to around 102,000, corresponding with, a number of wicks over here that we're testing that level. The low on May 19th was $102,105. And so I think we could be heading down there. And really, this does look like a bear flag with a downside move here, consolidation, really getting rejected from that level at 106,000, which, what does that correspond with? That actually corresponds with the consolidation highs over here. So we have multiple wicks above that level, but really no closes or opens above that level, looking back over here. So that was some notable resistance. While we did wick higher than that, there weren't a lot of opportunities to trim, to exit at above that level, but there were plenty of opportunities to manage risk, to exit at 106. And we are now currently struggling to get above that level. And with that, we can also see, zooming in on the chart, we do have some volume here that we can look at kind of to analyze what's going on with these values. Like I said, I think this looks like a bear flag. I think this could be heading lower. And if we look at this, we see lower volume with these wider spread candles, these two green candles here. Just going to zoom in a little bit so you can see this hopefully a little bit better. Not very much volume behind those moves. And then we see a burst in volume, but not a wide spread in that candle there. So what that tells me is there's a lot of effort going into holding Bitcoin price up, but it's not taking it anywhere. All of that extra volume trying to push it higher, it's not going anywhere. So that effort is suggesting rejection around 106. And so I think that we could be seeing a pullback and a breakdown. And this was also gone over on X with, let's see, I'm just going to go up to my replies. So let's see, profile, replies. There might be some crap on here. Sorry, I'm a little bit of an idiot. But what we can see is, this is actually on Ethereum, so good segue to the next one. But based on the volume labeled 1 and 2, how much volume is there? And so there's this person who was saying, I would say there's more demand than supplies. Please correct me if I'm wrong. And so I replied to him, I would think that the divergence on number 2, higher volume, lower spread, what I just talked about with Bitcoin, would mean that there's a lot of effort to keep the price up. And so that would suggest to me that rather than demand, and that would suggest supply rather than demand, and that the small rally will not be sustained. But I'm also learning, so could be wrong. And to my surprise, Wyckoff Analytics responded to me, we are definitely seeing some supply here for sure, but that doesn't mean price will continue lower from here. But there is effort versus result at this level. Also, I should have used the CME chart instead to get a better view of the volume, but that's okay. I am surprised that they responded to me. They don't usually do that. So, and then this person, Andre, says, in my honest opinion, you are exactly right. So super nice exchange there. And because I don't have the book next to me, but I have been reading the Wyckoff methodology. I read some yesterday. I had taken like a week break from it. Really like it a lot. Yeah, it's just been really a great resource for me in getting better at this volume analysis. And, that really just to support my thesis that I think Bitcoin is going to be going lower, more bears getting on board, everybody being on a bearish on Bitcoin, the top is in for the 4-year cycle, all this stuff. And then those people get left behind as we put in new all-time highs, put in a new massive rally like we saw over here. So yeah, I think that there's just a lot more upside for Bitcoin, but I think there's more opportunity to the downside beforehand. So excited about that. And then now looking over at Ethereum, we can see that it is currently trading right around $2,611. But let's look at that kind of, volume analysis over here. I'm not sure of the time frame, actually. I can look at that. What was their time frame for the chart here? This was on the 4-hour time scale. We can see that, big candle there, number one, corresponds with higher volume, so that makes sense. No divergence there. A lot of effort, which goes into pushing ETFs or ETH's price up. And then we see this little bit of consolidation. Still a lot of volume relative to what we've seen over here. The price is not going anywhere. So a lot of effort in that volume, not much result. So that does suggest some weakness. However, just after this, price did break out to above $2,600, which you can see marked over there. And so maybe I do want to switch this over to the 4-hour time frame, and maybe I should add that to my favorites there. And we can see that, yeah, we see surge in volume, not much result, surge in volume, result, but still surge in volume. And it's just consolidation. Now with that dying down, that volume, although this candle is not yet complete, need to wait 4 hours or something until midday. We'll have to see, does this break higher or does this pull back? And, I think that this could be pulling back. I am really eyeing right around $2,350. I have a limit dip buy. I normally do daily DCAs for Ethereum and Bitcoin and other cryptos, but those are the two big ones. But for $2,350, I have a limit dip buy set for my entire weekly DCA, the amount that I DCA over the course of a week. And so I'm hoping that gets filled, but I'm kind of thinking that it may not. I think that maybe Bitcoin only pulls back to 2,400. So what I plan on doing, potentially plan on doing, I get paid this Friday. And so I might leave that dip buy at 2,350, but I might add another dip buy at 2,400 just to be more aggressive on that pullback, because I do think that Ethereum could be seeing all-time highs later this year, getting back above 4,000, getting back above 4,800, getting into around 5,000 and above. I could actually see Ethereum hitting 8,000 by the end of the year, which I have talked about during Crypto Corner Sat Stacker, and that's really the basis for my thesis of crypto, Bitcoin, alts, whatever, going higher, rallying into the end of the year. And so I am really excited about that. But just like with Bitcoin, I do have this Fibonacci retracement here and the 382. So I believe with Bitcoin, I have the 382 here at around 98,000. With Ethereum, the 382 is just below 2,400. So maybe we see a pullback there. Everybody starts to get really bearish. Everybody already hates ETH, which makes me like it a lot. But bigger picture, we've got, move up consolidation, bull flag, move up longer consolidation, bigger upside move coming. So I am excited about that. Looking forward to it. And with this consolidation here, we do have the volume coming down over time. And so that could be suggesting with a little bit of maybe a spring breaking below those lows, which I have marked at $2,323. So 2,323. If we break below that, lots of people get bearish. They get stopped out at that yellow line, and then we rip some faces off. So excited about that. But yeah, I did want to flip over some of these stocks over here that I have on the list. First, beginning with GameStop, which did close yesterday just above $30 a share at 30.64, up 2.82% on the day, and up about 0.5% in the pre-market, around $30.80. We have seen a downside move in consolidation, so maybe this looks a little bit bearish. We do have higher volume going up to here, and then during this pullback, we see volume die down, so that could suggest a continuation to the downside. So, I think it's good to be prepared for that. It's good to brace for further downside. But what I wanted to go over with GameStop is actually something that would be very bullish in my view, and that is some data from Unusual Whales. And I actually already pulled up the data over here. Spoiler alert, I'll look at the 14 days in a second, but from yesterday, just looking at the 1 day net call and put premium, what we can see, so in yellow, we have the stock price. So the stock price started lower, danced around a little bit, bounced around a little bit over here, going up and then pulling back some. But like I said, up over 2.8% on the day, up about 84 cents. So we can see that they're in yellow. And then what we see in green is the net call premium, which is more or less flat. It doesn't really stand out to me as being that incredible or anything, but that net call premium, believe it or not, this little, move up from this gray horizontal line here, that's actually up almost $2 million, so pretty massive. And the reason why it doesn't look like it's up that much is because it's relative to what we saw in the net put premium, which is the red line here. And so that came down massively, which is the selling of puts. That's suggesting that a bottom could be forming. And so the net put premium came down by nearly $21 million. So down $20.99 million, pretty massive there. And so that suggests very bullish or potentially bullish that bottom is being formed. And if we look at the bear bull slider over here, very clearly 62% on the bullish side. So looking very good there. And, we have seen this recently that we've seen net put premium coming down, being very negative, suggesting that a bottom is in. So if we do look over the past 14 days, what we can see is maybe history is going to repeat itself. I don't know. But what we can see on May 19th, we saw a net put premium come down by over $16 million negative, drawing that net put premium down here. Following that, the stock price in yellow did go up a little bit, but we did see another day where the net put premium came down even more. So on May 21st, net put premium came down by nearly $25 million, $24.85 million on the day. And so what do you notice happen in the stock price in yellow following these drawdowns in net put premium? So let's see, stock price over here on this day, on May 19th, closed around $28. Then over here closed around $29, just a little bit below $29. But then the stock price rallied over the next few days, going up to around $35 before getting rejected and pulling back. Now we are seeing that net put premium being negative pretty massively, just like over here. So I think that we could be seeing the next leg up very soon, getting back to $35 and beyond. We do have earnings being reported next week on June 10th in the after hours, and the expected move is around 12% to the upside or downside, which would be about $3.68 plus or minus. So do keep that in mind. I suspect we will be seeing a pretty big move to the upside based on this data that we're seeing here. And so actually the 19th and 21st, maybe I want to look at that on the chart over here. So let's see, the 19th and 21st. Over here. So yeah, it's just a little bit of consolidation before the stock price, even from the high on the 21st, the stock price went up about 20%. So yeah, I mean, I think that there's just some very nice bottoming signals with that options data. But now I'm going to flip over to the next ticker on the list, which is Indie Semiconductor. I did get an alert on this yesterday. I got that alert set at $2.55. Not exactly sure why I have that level marked there. I think it's based on, kind of having a risk to reward trade set up here. I don't have a position in this, don't plan on creating one, but this is really just based on the thesis that this uptrending green line has acted as support every time we have tested it. Now we may have come back to retest it again, but a little bit higher. But we have generally bounced from that level, which has resulted, in moves of around 40% there over here, a move of around 40% again, and then over here another move actually around just shy of 30%. But so now we're pulling back or about to pull back to that level. Maybe we see a test of that red uptrend, which was that resistance, and that would be suggesting from this level, not a Fibonacci retracement, I want a measurement here, that will be suggesting a move of around 35%. And I do have a trade mapped out here. I don't have a position, don't plan on getting one, but this risk to reward ratio looks like it's around 4, so it looks pretty good there with the downside potential. Stop loss at 23.2. Wait, that doesn't make sense. $2 and 33.6 cents. That is based on like the consolidation lows over here. So we can see the close on May 21st was at a price of $2.32. And so we got some consolidation there, multiple wicks testing that level. Move over here, and maybe I actually want to adjust the stop to be at 232. And so that puts the risk to the downside about 10%. And let's see what that midpoint is. Make sure that I have that correct. Yeah, I guess this got moved around a little bit. So this should be 255. And then I'll just make the take profit level at 350. And so if I do adjust the axis here so we can see that. So that entry level, 255, okay. And then stop loss at that consolidation lows, which, it could get stopped out. There could be a spring or a fake out break below that level, so risky there. But that represents a 9% move to the downside, whereas the upside you have a potential of getting to around 37.25% up to around 350 there, just corresponding with the retracement to the green trend line, a bounce to the red trend line. So yeah, that could be a very nice trade, but it could be breaking down. So yeah, I'm not in it, don't plan to get into it. The market cap here is around $500 million, semiconductor company. I just don't want to spread myself too thin. But yeah, maybe that's a fun idea if you're interested in Indie, managing risk with a stop loss. Maybe, I don't know, the stop loss could even be down to this gap fill at 214. And then if that were to be the case, let's see. Actually, I just want to make sure that the close there was at 214, so that is correct. And so, if we do put the stop loss at 214, that adjusts the risk to reward to be closer to, 2, where you got about a 16% move to the downside and about double that to the upside. So, maybe I'm actually just going to undo that. So we have that there, but I am going to adjust that line so we can see that it's a gap, which I like to color blue, and it has not yet been filled. So it is a dashed line there. And then I'm going to make that risk to reward trade idea, lock that in place. So yeah, maybe we'll revisit it. Maybe we won't. I don't know. And then the next one on the list I think is very important to be talking about. This is INM, InMed Pharmaceuticals, closed yesterday at $3.42, up 37% on the day. So really nice. But what do you notice about the candle there? it was massively red. And so I had covered this on Sunday during Ticker Request Live. It was requested. And, I actually have to adjust the axis here because I want to look at this trend line that I have drawn there, and we can't do it with this big candle. The y-axis will auto fit that and then scrunch all this down. But what I drew on Sunday was this trend line going to the upside, suggesting that this could be at support over here. Also, what we do have is this Fibonacci retracement here, the 786 around 250. Did get a couple days where we traded below that, which was apparently a very nice dip buying opportunity. Although I did also suggest the bigger time frame, 786 is around 221. So maybe we could be going down to that level. Always good to plan for the possibility of something to go lower than you expect. But what ended up happening is, I believe, I don't know if it was earnings or what it was, some news. FDA approval, I believe. Not really sure, to be honest. Oh, no, yeah, they reported their earnings, apparently, just over here. You can see it above my head. There was a pretty massive rally. And we can see that price went up during market hours to a high of 798. But if we flip over to the 10-minute time frame, we can actually see that the pre-market, or actually the pre-market high, I believe that, pre-market high was 943, so very massive. When I was covering this during pre-market prep yesterday, it was around $5, $5.70, somewhere around there. And, I probably talked about good idea to trim. I know I talked about it being a good idea to trim because maybe it goes higher. That's great. You want to have a little bit on the table still if it does, but likely it's probably going to be pulling back. So if up, hundreds of percent, good idea to take half of it off the table. So if it goes up 2x, 100%, take half of it off the table. You're not risking any money at that point because you've taken all of the cash that you put into it out of it. You got the other half as just a runner, and then you could see it go up higher, go up to $7. Take some profits there, trim some more. But then what did we see following that open? So just flipping back over to the daily over here, we can see that, if people are chasing it, they end up buying at the open, and then this pulls back down 40%. And maybe it doesn't get back up to $5, $7, $8, whatever it is. So very risky to be chasing this stuff. Although it is possible that we see, pull back here and then another move to the upside. Things tend to happen in twos like this, as we can see over here. We saw, kind of a double top here. And so maybe this is just going to be pulling back to around 250, but maybe there is another pump. But at this point, very, very risky. Good to be managing that risk by trimming, taking profits, all of that stuff. And then now let's just flip over to NIO, which did close yesterday at $3.52, being down about 0.57% on the day before they reported earnings during the pre-market today. And it looks like they're down over 3% in the pre-market, trading below 341. But that is above a level that I had previously mapped out. I actually did add during the pre-market at 332. The reason for that is because from this upside move, we do have the 786 there at 332.4. And so maybe that acts as support. But overall, I've been very unimpressed with NIO. Actually, I regret getting into it at all. But, some valuable lessons were learned with it. So, no regret in that sense. But what we can see if we do look at the 10-minute time frame, we can see that we did pull back. Wow. Exactly to 332. I got to fill at that level. It does look like we're putting in a bounce, consolidating. So maybe that's a bull flag, and the bottom is in around 332, corresponding with that 786. So, I'm pretty impressed, in all honesty, to see the low at 332 where I got to fill at. I also did have an alert here at 336. Just going to close that. And let's see, putting this back on the daily. I'm just going to open up the chat really quick, but we just got about a minute before we're on the hour. Nothing in the chat, so I might end the stream there. NIO, possible the bottom is in, like I said, around 332, but maybe we hit it during market hours. Yeah, let's just look for not getting below $3.02, which was the low hit on April 8th. So hopefully that is the low. We put in higher lows, and then maybe we get a move to fill these gaps to the upside around 471 or 517. But I don't think that NIO is going to be hitting $8 as I have talked about in the past, as I was hoping it would be over here. We've just been getting rejection after rejection. And, I think with it being a Chinese company, an EV stock competing with Tesla, and also, like I said, being a Chinese stock, I think that there's just a lot of risk to it, and I don't think it's really worth it. But I do have a position, so I am adding on dips, but I don't plan on holding long term. Selling covered call to my average is now below $4.50, but I do have some calls that are probably going to go to zero. But anyways, with all that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market preps and videos like this. Hope you have a great